Thanks for joining me this Friday, the 9th of May. I'm Grady Wolf, market analyst with Bell Direct, and this is our weekly market update. Quarterly corporate updates, global trade tensions and China's economic recovery were the key drivers of market movements this week. So let's dive into the outlook and how each of these events impact your investment journey. Investors were also very reactive to corporate updates this week, both on the trading front and to companies revealing the extent to which they are impacted or exempt from Trump's tariffs. WiseTech Global fell over 2.5% on Tuesday after warning of potential demand risks from tariffs, while healthcare stocks came under pressure midweek after Trump signed an executive order to incentivize drug manufacturing in the US, as tariffs on imported pharmaceuticals are expected to be announced within the next 2 weeks. I spoke to Bell Potter healthcare analyst John Hester yesterday to discuss how Trump's pending pharmaceutical tariffs may impact some of Australia's listed healthcare companies. Here's what he had to say.
Yeah, so there's a few of them manufactured in Australia, and obviously the tariff gets levied on the transfer price into the US. Yep. So there will be there will be earnings implications for a select group of companies. So let's run through a few of the names.
Yeah, so Telix, what's the impact there you're expecting?
Yeah, so Telix manufactures a point-of-care product. It's manufactured in the US just in time for delivery into patients, so no impact whatsoever.
Perfect. Avita.
Avita also manufactures in the US, so nothing for them.
Perfect. Mesoblast.
Mesoblast is a pharmaceutical company. Its product is actually manufactured in Singapore. Mesoblast came out a few weeks ago and said they don't expect an earnings impact because their product is sourced or originated in the US from US donors. So it's a US domiciled product, if you like. Yeah. So they're not expecting a tariff impact, we hope, because the impact there would be, it's an expensive product.
Yeah, and healthcare products are quite expensive in nature anyway.
Yeah, so, but just to be clear, the company does not expect a tariff impact.
Okay, Pro Medicus.
So Pro Medicus is a software company. As far as we're aware, there will be no tariff on them at this stage. They're yet to come out and make a statement, but that's the best advice we have at the moment, is that there's no impact on their product specifically.
Yeah, ResMed?
So ResMed are an interesting one. They manufacture in Mexico. They also manufacture here in Western Sydney. You would expect that there would be a tariff levied on the transfer price of the units they export out of Sydney and Mexico into the US. They've also come out and said that they're going to commence manufacturing in the US, I believe. Mm-hmm. Not to be confirmed, yet to be confirmed. So I would expect a modest impact based on the impact of the tariffs on the Australian manufactured product.
Yeah.
But look, we don't cover ResMed, as you know, so that's my best estimate at the moment.
And finally, Nanosonics.
So Nanosonics are a manufacturer. They manufacture here in Sydney as well. Mm-hmm. We've come out and had a close look at that. The impact is between $1 to $2 million annually. That is the absolute value of the tariff we expect to be levied on their product. That is actually around about 5 to 10% of their pre-tax earnings.
Wow.
So they only generate EBIT of around about $20 odd million. So $1 to $2 million doesn't sound like a lot in terms of the top line, but in terms of the overall earnings impact, we think it's material. So we've actually got that product, that name on a sell.
Elsewhere this week, Westpac and NAB delivered contrasting first half results. NAB beat expectations with a $3.6 billion first half profit, lifting its interim dividend and showing a decline in credit impairments while maintaining a stable net interest margin. In contrast, Westpac underwhelmed. Its net interest margin fell, the dividend missed expectations, and profits slipped 1% year on year on the first half. Bank valuations are high right now. Westpac's weaker results led to a share price dip as it struggled to justify its 16.8 times PE ratio. NAB, however, delivered a strong performance that reassured investors. Notably, NAB's strong position in business banking is drawing increased competition, with Westpac and CBA now eyeing that space more aggressively. On a macro level, there was big news on the trade war front this week. The US and China have agreed to restart tariff talks, lifting market sentiment on hopes of de-escalation. And closer to home, the materials sector rallied as China's growth outlook improves, giving a much-needed boost to Aussie miners after 2 really tough years of depreciated demand from Australia's #1 trade partner. At the same time, China's central bank announced a 25 basis point rate cut to a key interest rate, lowering the lending rate to commercial banks to 1.5% in an effort to stimulate the economy. Additionally, officials pledged further support for publicly listed companies impacted by US tariffs. This is a very welcome boost, as the most recent economic data out of China revealed a return to slowed economic growth, with the country's trade surplus declining, latest monthly GDP declining, business confidence falling, manufacturing output declining, retail sales easing, and services PMI also falling, among other metrics. So, with a rebound in economic growth on the horizon for China and trade war de-escalation hopeful over the coming weeks, we may see a recovery rally for our big miners and companies with exposure to the region. On the healthcare front, as John Hester said, some companies may be affected by US tariffs, but each have or will update the market on exactly the impact, if any. Locally, from Monday to Thursday, the ASX 200 fell 0.56% following turbulence in the US and global trade concerns weighing on investor sentiment. Healthcare and financial stocks took the biggest hit this week, while utility stocks posted a 1.9% gain. Tabcorp was the biggest winner this week with a gain of 17.7%, while Nuix tumbled 19.22%. On the broader market index, the All Ords fell 0.41% over the 4 trading days, as MedAdvisor rocketed 35.42%, while Brazilian rare earths fell 12.83%. The most traded stock by Bell Direct clients this week was Zip. Clients also bought into Westpac, ANZ, Woodside, NAB, BHP and CSL, big names there, while taking profits from Evolution Mining, Macquarie and Wesfarmers. And the most traded ETFs by our clients this week were led by Vanguard US Total Market Shares Index AUD ETF, Vanguard Australian Shares Index ETF and BetaShares Australian Hybrids Active ETF. On the economic calendar front next week, we may see investors locally react to Westpac consumer confidence data for May and NAB business confidence data for April out on Tuesday, while overseas we'll gain more clarity on the US inflation journey with key inflation, retail sales and PPI data out later next week. And that's all we have time for today. We hope you have a wonderful Mother's Day to all the mothers out there, and as always, happy investing.